Welcome to the Deep Dive, the show where we cut through the noise to bring you the most important nuggets of knowledge from the world's most impactful companies and ideas. Today, we're taking a deep dive into the recent Q1 2026 earnings call transcript from Alibaba Group Holding Ltd. I mean, a truly massive force in global tech and commerce. What's immediately striking, I think, is just the sheer scale of ambition here. Alibaba, a company that's already 26 years old, globally recognized, they aren't just making minor tweaks, they're explicitly talking about embarking on a new entrepreneurial chapter, and it's underpinned by these staggering multi-billion-dollar investments.
Yeah, it really jumps out. It's not just business as usual.
Exactly. So our mission today is really to explore this ambitious vision. We're focusing on what Alibaba themselves are calling their two major historic opportunities. We'll unpack the significant capital they're deploying to capture them, hopefully giving you a clear understanding of the strategic shifts defining their future. Because look, when a company of Alibaba's size uses language like new entrepreneurial chapter and historic opportunities, you know something transformative is brewing. They're putting hundreds of billions on the table to redefine their core business and, well, by extension, parts of the global digital landscape.
hmm And what's truly fascinating here, I think, is the absolute clarity of their strategic pillars. They're making these massive calculated bets on two fronts. First, this AI-first cloud platform, and second, a really deeply integrated consumption platform that caters to, well, daily life. It's not just a broad strategy. It really raises a crucial question. How will these two seemingly distinct areas not just grow independently, but actually synergize? How do they create a unique and frankly formidable market position that sets them apart globally? It signals a very intentional doubling down on their strengths, but with a kind of profound reorientation.
That's precisely it. They're not scattering their efforts, are they? Alibaba seems laser focused on these two strategic pillars. First, as you mentioned, building that technology platform centered on AI plus cloud. And second, creating this comprehensive shopping and daily life services consumption platform. It's quite the vision.
And the money behind it really underscores the seriousness. Over the next 3 years, they've planned to allocate a staggering RMB 380 billion, what's that, roughly 52 billion US dollars, just for cloud and AI infrastructure. Then on the consumption side, they're committing another RMB 50 billion. I mean, these aren't minor budget adjustments. These are strategic long-term bets on future growth designed to impact how you will interact with technology and commerce for, well, years to come. And to really reflect this sharper focus, Alibaba has even adjusted its financial reporting structure, which gives us a much clearer view of these two engines working.
Okay, let's really dig into that first pillar then. The AI plus cloud powerhouse. The numbers from their cloud intelligence group are genuinely impressive. Revenue accelerated to a pretty robust 26% year-over-year growth. But here's where it gets really interesting, I think. Their AI-related product revenue maintained triple-digit growth for the eighth consecutive quarter.
Eighth consecutive quarter.
That's not just a passing trend, is it? That feels like a fundamental reshaping of their business identity.
Indeed. And it's not just impressive numbers. It signifies a strategic pivot. AI is no longer, a peripheral offering. It's becoming a core, self-sustaining revenue engine. This AI-related revenue now accounts for over 20% of their total revenue from external customers. That indicates a really profound shift. It suggests Alibaba is moving from being, say, a cloud provider with AI services to an AI-first cloud provider. That fundamentally reshapes the competitive landscape for cloud services globally, potentially setting a new standard for others. And what's more, this strong AI demand is also driving robust growth in their more traditional cloud products, like compute and storage. So it shows a powerful ripple effect across their entire cloud offering.
Right, it's like a powerful snowball effect, pulling everything else along with it. And it's not just internal growth either. They're forging some serious strategic partnerships. For instance, they announced that significant collaboration with SAP. Alibaba Cloud will support SAP customers on its platform. And maybe even more telling, SAP will leverage Alibaba's Quinn models, that's their advanced suite of proprietary large language models for enterprise AI transformation. That really signifies, as they put it, a recognition of our cloud infrastructure and AI capabilities by global leading enterprises.
And we connect this to the bigger picture, that SAP partnership, plus Alibaba's open sourcing strategy. It shows a multi-pronged approach, doesn't it? You've got deep enterprise integration at the highest level, and at the same time, broad developer ecosystem enablement. Alibaba has also made significant strides in its own AI foundation models. They've released upgraded Qwen 3 models, non-thinking reasoning AI coding models, which they're highlighting as global top performers. And specifically, their Qwen 3 coder model seems to have rapidly increased Qwen's user adoption in overseas markets, pointing to strong developer interest there.
And they're not keeping all these advancements locked away, are they? They're actively open sourcing models like the video generation model 1, 2.2, and the text-to-image model Quinn Image. That really empowers countless customers and developers to build and innovate, creating their own AI applications on top of Alibaba's foundation. It kind of cements their central position in this whole burgeoning AI ecosystem.
Yeah, that open source approach undeniably fosters a vibrant ecosystem. But at the same time, Alibaba is deeply integrating AI into its own core applications, right across their vast network. Take AMAP 2025, for example. They've launched it as the world's first AI-native location-based application. Now, this isn't just about better maps. They say it brings spatial intelligence into dynamic real-world scenarios, positioning AMAP as a new gateway for future lifestyle services. So think of your map app not just showing directions, but maybe anticipating your needs based on your real-world context, suggesting the right coffee shop at the right time, perhaps.
Yeah, it's a massive leap, yeah. But scaling something like agent-driven work feeds to an enterprise level
Yeah.
that must have its own unique hurdles, especially around, data privacy, integration with older systems. Does the transcript give any hints on how they plan to navigate that, or is that sort of a future challenge?
That's a very perceptive question. The transcript implies that by building these foundational coding capabilities for the agents, they're laying the groundwork to address those integration challenges down the line.
Oh.
And this leads us to a really crucial point in AI development. This evolution from, say, simple chatbots to what they're calling agents. Agents are much more sophisticated. They need larger context windows, the ability to use multiple tools or tool chains, access different internal enterprise systems, all to execute complex tasks. It's a significant step up in complexity and capability from just, answering questions.
And Alibaba Cloud is seizing this opportunity. They've introduced Agent Bay. It's a new product offering a sandbox environment specifically for these agents. So essentially a dedicated testing and development ground for these next-gen AI applications. It really highlights the huge opportunities this creates for cloud vendors. What seems critical here is providing the coding capabilities for these models to connect to all the various tools and systems, handling both complex enterprise tasks and maybe more granular consumer requests. This is really setting the stage for a future where your digital tools aren't just reacting to you, but anticipating your needs, almost like a proactive personal assistant, whether you're navigating a city or managing your work calendar. It's a vision that could fundamentally reshape our daily digital interaction, right? Precisely. And there's also clear synergy within the broader Alibaba ecosystem they mentioned. Client service products within Alibaba Cloud can synergize with Taobao, DingTalk, AMAP, Alipay, providing automated solutions at the business level. It really integrates these advanced AI capabilities throughout their entire network. So it's not just about isolated products, it's about a fully connected AI-powered ecosystem.
Okay, let's pivot then to the second historic opportunity, this comprehensive consumption platform. Alibaba undertook a major organizational change here, combining Taobao and Tmall Group, Yili.me, and Fliggy into what they now call the Alibaba China e-commerce group. That's a pretty sweeping integration. They're not just bundling apps, they're trying to create this unified kind of one-stop consumption experience for practically everyone in China. But integrations like that, they often come with significant user experience challenges, operational hurdles. How are they trying to make this work seamlessly? Well, they've launched things like that tiered loyalty program you mentioned, connecting Ali.me, Fliggy, and AMAP. That's designed to enhance the member experience across different consumption scenarios, trying to tie it all together. Their long-term goal is nothing short of creating a comprehensive consumption platform, catering to 1 billion consumers' full spectrum of shopping and daily life needs. And they're aiming to lead in what they see as a massive RMB 30 trillion addressable market. I mean, that's an incredible ambition. Try to capture not just e-commerce, but the whole fabric of daily consumer activity.
And their progress in quick commerce, which seems to be a key part of the strategy, has been, well, frankly, remarkable. Since May, their investments in this area have rapidly surpassed key milestones. The growth figures are really impressive. Monthly active consumers, Amex, on their quick commerce business are approaching 300 million in August. That represents 200% growth compared to before April.
Yeah, and that surge alone contributed to a significant 25% increase in monthly active consumers just on the main Taobao app. The China e-commerce group's daily order volume achieved new records. Peak daily order volume hit 120 million, and the weekly average was 80 million daily orders in August.
They're now claiming to be the market leader in food delivery to home in terms of orders. I mean, that kind of rapid expansion is incredibly difficult to achieve, especially in such a fiercely competitive market.
Absolutely. They've also seen their merchant supply reach industry-leading levels, apparently. And daily active riders exceeded 2 million. That's a threefold increase from April, creating over 1 million new jobs in the process. It's no wonder they're saying they've already achieved our first stage goals beyond our own expectations and user growth and consumer mindshare. But, okay, quick commerce is notoriously tough, very competitive. Rapid expansion like this often comes with significant profitability challenges, right? The earnings call must have addressed this. What's the strategy for making this financially sustainable, particularly concerning unit economics, UE, the profit or loss per transaction?
That's a very insightful question. And yes, they did address it. They acknowledged the past market share challenges. But now that they're leading in scale, they seem confident in achieving industry-leading efficiency. In the short term, they actually expect UE losses to be reduced by half. Their strategies. Well, optimizing the customer mix, focusing more on repeat, higher-value customers. Optimizing the order mix, trying to increase high-value meal and non-food orders to raise the average order value, the AOV. And critically, significantly improving fulfillment efficiency and costs. They expect logistics costs to decline as the order scale stabilizes.
Okay, so efficiency gains are key.
Yes, but this also raises that important question about strategic investment. The real insight here, I think, is that Alibaba seems to view quick commerce not purely as a standalone profit center. It's almost like their strategic loss leader. It's the high-frequency Trojan horse to capture consumer mind share and data, which ultimately feeds into the profitability of their entire e-commerce empire. It's a classic platform play, but just on an unprecedented scale, leveraging their massive existing user base to drive deeper engagement across the whole ecosystem. Long-term, they anticipate further logistics cost optimization due to order density, plus improved targeted engagement of offline merchants. And they specifically stated they are not solely focused on quick commerce's standalone profitability. It's the incremental benefits to our e-commerce business that matter. The idea is quick commerce will bring sustained positive economic value to the overall platform.
It's a fascinating long-game strategy, then, leveraging volume and high engagement for broader gains across the board. And they're expanding beyond just food delivery, aren't they? Aggressively moving into non-food categories and deeper O2O online to offline integration. They're using this lightning warehouse model for hyperlocal quick commerce over 50,000 warehouses, showing, 360% year-over-year order growth. And apparently a quarter of the supply in these warehouses already comes from within the vast Alibaba ecosystem itself.
They're also integrating Fresh Shippos, that's their supermarket chain front warehouses, into Taobao Instant Commerce. Order volume there is already exceeding 2 million, up 70% year-over-year, and Tmall Supermarket is upgrading from its traditional B2C fulfillment model to quick commerce for faster shipping times. They're even onboarding Tmall-branded offline stores into Taobao Instant Commerce. That enables unified online-offline operations, O2O, and they expect up to 1 million stores could join over time. I mean, this isn't just about faster deliveries, it's fundamentally reshaping the retail experience itself.
That's a massive push, and the potential financial impact they project is huge. They expect Taobao Instant Commerce and Quick Commerce to add, get this, RMB 1 trillion in annualized incremental gross merchandise volume GMV to the platform within the next 3 years. But hang on, this isn't their first attempt at quick commerce, is it? Alibaba acquired Ala.me years ago. What's actually different this time around compared to that earlier venture?
That's a really critical point, and one the call addressed directly. While yes, Alibaba.me's acquisition years ago might not have immediately resulted in dominant market share, the crucial insight they shared is this. Ella.me made tremendous improvement in terms of infrastructure development and capabilities development over those intervening years. They explicitly said we couldn't start from zero, and in just 2 to 4 months be able to service 120 million orders. All of that credit goes to Ella.me. It really makes you consider how often that, unglamorous foundational work of building infrastructure is absolutely vital, even if it doesn't grab headlines immediately.
That's a powerful testament to doing the groundwork. So the difference now is the integration into the main Taobao app, which provides that absolutely vast number of users, combined with Ella.me's established merchant base and that meticulously built-up logistics system from years of effort. And the investment logic is different too, focusing on the overall incremental positive benefit for the entire e-commerce business, not just making quick commerce profitable on its own.
Exactly. It really reveals how previous, seemingly slower progress can be absolutely critical in building the necessary infrastructure for future rapid success. They're strategically leveraging those past investments for present-day scale rather than having to rebuild everything from scratch. It's a very intelligent deployment of existing assets, actually.
Okay, so let's try and bring it all together and look at their overall financial health and this pretty ambitious balancing act they're performing. Total revenue was RMB 247.7 billion, showing 10% like-for-like growth. Okay, solid. However, their adjusted EBITDA, that's earnings before interest, taxes, and amortization, a key measure of operating profitability that decreased 14%. And this was primarily due to those massive quick commerce scaling investments we just discussed. But it's important to note, as they pointed out, the China e-commerce group's EBITDA would have grown if you actually excluded these strategic investments.
Right. On the brighter side, though, JAP net income, that's generally accepted accounting principles net income, the official bottom line profit figure that increased 76%. Meanwhile, ADC's, that's their international arm-adjusted EBITDA loss, narrowed significantly. They said it's approaching break-even. And cloud EBITDA margin remained relatively stable at 8.8%. In terms of cash flow, though, free cash flow was an outflow of RMB 18.8 billion. And that was mainly attributed to accelerated capital expenditure for the AI plus cloud infrastructure, about RMB 39 billion there, plus the substantial investment in Taobao Instant Commerce.
Right. Despite that significant outflow, though, Alibaba maintains an incredibly strong balance sheet. They've got nearly $50 billion in net cash, apparently. That gives them ample flexibility to support these long-term strategic investments. And they're also reiterating their commitment to shareholder returns. Through share buybacks, they bought back $815 million in ADSs this quarter dividends, and of course, investment for growth.
This really prompts that critical question, doesn't it? How does a company strategically allocate such massive capital between something like AI, with its vast but still somewhat emerging potential, in a highly competitive, established domestic consumption market like quick commerce? Their answer, as the earnings call makes pretty clear, is to firmly grasp both opportunities, viewing them as equally critical. They seem to be carefully balancing short-term versus long-term returns, and they're explicitly willing to accept short-term profit pressure for that long-term growth and market leadership in both of these foundational pillars. It's definitely a high-stakes strategy, but potentially very high reward, too.
So, as we conclude this deep dive, we've really explored how Alibaba is making these monumental investments and strategic reorganizations around two key pillars: AI plus cloud as the future's technological engine, and this comprehensive consumption platform driven by quick commerce that aims to reshape, well, your daily shopping and lifestyle needs. You've hopefully gained some insight into how a global tech giant is strategically deploying immense capital, not just for incremental gains, but for truly transformative shifts that will likely impact digital life on a massive scale.
Yeah, and maybe here's a final provocative thought for you, the listener, to consider. Given Alibaba's really aggressive investments in both these agent-driven work feeds for enterprises and their vision for an all-in-one AI assistant for consumption for consumers, what aspects of your own daily digital life, maybe in the next few years, do you think will be most radically transformed by these converging technologies and this kind of strategic approach? Will your map app genuinely start anticipating your needs? Will your work software proactively manage your entire schedule? It's a future that seems to be rapidly taking shape right now.